So the hardest skill in trading is not finding a trade. It's admitting your bias is wrong while you still have time to act on it. So your bias is pretty much a working theory. Price either keeps confirming it or it stops. So a bias flip is the moment structure breaks your read. It's not a feeling, it's not a hunch. It is a specific break at a specific level. So these three things have to happen. The first thing is price will run through a level that you were actually leaning on to keep your bias. Usually that's where you place your stop loss. The second thing is the follow through actually fails. There's no continuation. And the last thing is price breaks the opposing swing. That break is the flip. Here's what it looks like on the charts. All right, so today we were actually bullish. We're looking at price coming down to sweep these lows, tapping into this fair value gap. And we looked at this particular low as our invalidation. We expected price to leave this low alone, okay, tap into this area to sweep overnight lows, and then continue back to the upside. So let's go down to the lower time frames. New York opens, we sweep down, take out the overnight lows, pull back, and then that was the end of the bullish move. Price came back to sweep this particular low that was left and also swept the low that invalidated the bullish idea. So that tells me that the bullish move is done. There's two things that can happen. Number one, we can flip our bias based on the new structure that has formed, or we can simply stand down totally. The only wrong response here is holding on to that bullish bias just because you called it out on Twitter in the morning. I flipped my bias and I've won the trade. I flipped my bias and I have lost the trade. And I have stood down completely. All three would always beat catching a falling knife.